Uh, can we please quickly take our seats? Yeah. Yeah. Give us 30 seconds more. Pura kursi. Dinesh bhai. Dinesh bhai. Dinesh bhai, give me 5 minutes. This one is better. Yeah, thanks. The next session is on MNC taxation, current and anticipated trends. And there is only one word to introduce the next speaker. That's how I prefer to introduce him, though he is not aware of it. Yeah, can I have everyone's attention, please? Excuse me, can everyone please be seated? Request. A speaker who's flown in specially from Mumbai to be with us, so let's start on time. He really values time. There's only one way I like to introduce Dinesh bhai, and that is he's the Shah Rukh Khan of the tax world. I don't know how much he's into films, but I hope he liked that analogy. No, I'm not. Dinesh bhai's introduction is not courtesy ChatGPT at all. I wouldn't take any such liberties with him. Dinesh bhai has over 4 decades of experience in the tax and regulatory profession. He's an advisor to some of the biggest promoters, Fortune 500, Indian conglomerates on tax and regulatory issues. He's a board member on Geo Platforms and Adani Green Energy. That's the formal introduction. But my memory goes back almost 12 years. Vodafone had lost the second round at the Bombay High Court, and the Supreme Court verdict came in their favor. My mobile is there, but I wrote an article after the Supreme Court judgment that came in January 2012, and that was 5 reasons Indian revenue lost the Vodafone tax case, and one reason I attributed was to Dinesh bhai. He advised Vodafone. He was one of the first to stick his neck out on that matter, and he came up trumps. And at that time I wrote, Dinesh bhai is not just the numero uno tax professional in India, but also in Asia. A big, big, big hand for Dinesh bhai, please. Dinesh Kanabar, CEO, Dhruva Advisors, LLP. The world of MNC taxation has changed, and how in the last decade or so. We had some huge matters, Vodafone, Shell, the tax litigation, and all of that spurred our coverage, Taxsutra's coverage of MNC tax issues, and there are hundreds of them here today. A lot of change over the last decade, and Dinesh bhai will be talking about the issues that are going to dominate the MNC tax discourse. I did ChatGPT, the 3 top tax issues, and I will discuss once Dinesh Bhai's presentation is over. Let's see how much it matches with that. Dinesh Bhai, what a pleasure it is to be hosting you. Pleasure.
Thank you so much, Arun, and I think you went overboard in trying to introduce. I don't think that was necessary. We have too many stalwarts out here in the audience, and I don't think such a laudatory introduction was warranted. But let me begin with something which I was hearing the last panel, and I must compliment the entire panel and Sanjay for doing such an excellent job. But there was one question which he asked, since we are going on talking about ChatGPT, and the question to all the panelists which Sanjay asked was that what will ChatGPT do to our profession? And I think it was a very serious question. I'll tell you why. As Arun mentioned, I have spent a number of decades in the profession, and I have seen it grow. So for example, there was a point of time when some of the large Big Four and other organizations would actually charge as much as $50,000 to give an MNC a guide to doing business in India. Okay, that was in the early 90s. You came to India, they were all copy, cut, paste PPTs, and then people charge money for doing FIPB work, and then FIPB became very sort of routine, and all the information for which you were charging actually was available free on the net. And all that ChatGPT will do is to mean that we need to hone our skills at a higher level, because there is so much that ChatGPT will be able to give you by way of what is mundane information or mundane analysis. And are you really honing your skills to move that 2 levels up to be able to provide the advice that your clients need? But it's a very important way to look forward. So let me begin. And just setting the context of what I see as going forward in terms of MNC taxation. A lot has been happening. The world is moving towards saying that MNCs have enjoyed a comparatively tax-free regime, try to plan around. And the world is now coming back to say that we need to look at substance, we need to look at principal purpose test, we need to look at everything and more, which is in terms of beneficial ownership, etc. And we'll go to some of these issues in depth as we move ahead. We are going on to say that Pillar 1 and Pillar 2 is making a journey, and I will spend a little bit of time as we go ahead, as to where is it going. There are certainly 3 steps forward when you see that Europe, 27 countries have now sort of gone ahead and implemented Pillar 2. And then you step back and reflect. Some of them are talking about 24, some of them are talking about 25, some of them are taking half-hearted measures, and USA is nowhere there. What does all of that mean? So is it 2 steps forward, 1 step backward, 2 steps on the side? Where are we going, etc.? We are looking at global minimum tax, and I think one of the important things to look at is the context of UAE. And I mention UAE not because we are present there as such, but I think here is one country to which many of the Indians have been migrating. It's very interesting to see transition of an economy, a thriving economy, from being totally without any element of tax, no regulatory oversight, nothing, nobody asking you any questions on your accounts, from there on to first having to prove your revenues because you are subjected to VAT, and now really re-looking at your accounts to say, here was a country where I just wanted to make profits, didn't matter how did I reflect, not reflect, to suddenly say there's going to be a 9% tax and a potential top-up as and when globe rules are announced. So very, very interesting. There was a mention about exchange of information. We'll talk a little bit as we go ahead. And that's going to be given norm. To presume that information is going to be restricted to an authority or to a jurisdiction is a total misnomer. Information is going to be free-flowing. And it's important. Through my career, I have seen MNCs, and I'm not trying to accuse anybody here, but sort of I've seen MNCs maybe thrive at times on 2 things. One is knowledge with the tax office, and today that knowledge is available in abundance at the click of the notice. Actually, far from it, India has been contributing to the evolution of the new tax thought process. So any planning which is done on that basis is not going to survive, and lack of information is nowhere there. You should presume that tax office is at least as knowledgeable and has at least as much information as you have, and what are the implications of that. There was a mention about, and we had Indrani here and we're talking about Tatas, and one of the important developments is the tax transparency report which has come about, and what does that mean, and what does that mean to our approach. So, of course, we have the global reporting initiative, but really how does tax transparency, what does it mean to MNCs? Where do we see things going forward is going to be very, very interesting. As we go to cross-border disputes, and somewhere on the line, if we look at India, we look at a fact that it still takes enormous amount of time to resolve disputes. And if that's going to be there, the best way to resolve cross-border disputes is probably mutual agreement procedure. And we do find that somewhere on the line, the time limit that it is taking to resolve such disputes is actually going up. We don't seem to be making too much of progress there. And finally, closer home, sort of as we look at MNC taxation in India and taxation of Indian MNCs globally, we still have issues with regard to profit attributable to permanent establishment and transfer pricing benchmarks and things like that. So we're going to talk a little bit about all of that. That's the context. So what I'm trying to do here is to sort of marry what's happening globally, but not really talk just at that 35,000 feet, but look at what's happening in India and how does that impact all of us. So let's first look at beneficial ownership. And this has become something very important. We first began on eligibility to treaty. And we spoke about residence, we spoke about tax residence certificate. And at one level, it is a bit disheartening to say that the issue of treaty eligibility and whether a tax residence certificate is sufficient or not is a controversy which has been going on from early 90s. And here we are sort of almost coming to mid-20s and it's still not resolved. So we have, fortunately, the Delhi High Court judgment and Bombay High Court judgment telling us that tax residence certificate is sufficient. And we are still going on examining eligibility of entities to tax treaty. But globally also, the issue which does come in is the beneficial ownership test. And at the heart of the beneficial ownership test is this simple question that are we ignoring SPVs? It's a given fact, for example, that any time an SPV is set up, there is somebody who owns that SPV, that somebody is located in the principal country overseas. And are we really, when we go out and say that is there a beneficial owner, the SPV, or is the money going somewhere else? What does it land up? And that's a question to which there are no easy answers. But more important, are MNCs getting increasingly alive? Are there things that we need to do more and more to ensure that when we are talking about eligibility to treaty benefits, now I'm not referring to eligibility treaty itself, which is the residence part, but sort of to the treaty benefits, are we beneficial owner of each of the streams of income that we are talking about? And of course, everybody in the audience is well aware that the word beneficial ownership is not used in every clause of the treaty. We have something on royalty, we have something on dividend. And the question is, as we pay out dividends, and as we know that dividends have now moved from there being a dividend distribution tax, and leaving that controversy aside about the tax treaty versus dividend distribution tax. But if the dividends are now going to be taxed in the hands of the recipient, and the recipient is entitled to a tax treaty benefit, when and under what circumstances would a lower rate of tax prescribed in the treaty apply to the payment of dividend to a non-resident? Very, very critical, very, very important. Is it sufficient, for example, that the board considers every time it receives a dividend what to do? Does it need to be reinvested? Is a bank account to which the dividend hits and immediately paid out to the parent fatal, not fatal? And a lot is sort of a work in progress out there. But clearly, a simpliciter act of having a dividend payout received by an SPV and onward remittance without any application of mind could potentially lead to a controversy and to which MNCs need to be increasingly alive to. On capital gains, particularly again in treaties where there is no such requirement that you have to be the beneficial owner, it's an evolving situation. But I must say that anybody, any MNC who's deriving income in India or actually globally, beneficial ownership and treaty eligibility is going to come under increasing scanner. We have spoken enough and more about tax residence certificate. We have spoken enough and more about principal purpose test, GAR, substance, etc. But beneficial ownership is something on which maybe there is not adequate attention, and that's where attention needs to be focused. And I mentioned earlier on that we have countries which have become part of the MLI and therefore have principal purpose tests which needs to be sort of complied with every time. There are other treaties which are not. But really, when you go to GAR and you look at substance, I think increasingly the tax authorities are going on to looking at what is that substance. Is that substance de facto substance? Is that de jure substance? Is it a paper substance? And I'm seeing MNCs getting increasingly worried and concerned about it. And I'm seeing MNCs really sort of starting to think about. So you go back and say that today in the context of capital gains, for example, the Dutch treaty is probably a very favorable treaty in many ways. For interest, there are certain other treaties. And MNCs are becoming and need to be even more concerned as to what is the sort of a substance. Is it just enough to say that I have got 4 employees but who have no real authority to make decisions? We are aware about the decision of AAR in the case of Tiger Global, with which I do not agree. But it sets out a few things which are fact patterns, which are a very bad fact pattern. So while I don't agree with the conclusion, the fact pattern in Tiger Global shows that here was somebody who was not a board member sitting on board, the only person authorized to sign bank accounts, etc. So again, how are we evolving our thoughts? Where are those thoughts going? And how are we concerned more and more about each one of those things? Therefore, we are looking at situations, for example, where there is now an inward migration. We have companies migrating from Singapore to India, probably because redomiciliation makes sense. I must say in the context of pharmaceutical companies, I have seen several examples where people moved their IP or research to countries, whether it was Ireland, whether it was Switzerland, etc., etc. And now relooking to come back and say, can we really justify why is our IP there or why is our research happening there when de facto all the work is happening, people not sort of continuing with those structures, winding up those structures, and that's something which I see as an evolving thing in MNC taxation. The attribution of profits to permanent establishment is going to be something which is going to be more and more and more relevant. I think we are moving beyond just that litigation to say, is there or is there no permanent establishment? I'm not saying that litigation is not relevant, that litigation sometimes can be very contentious, that litigation sometimes can be never ending. But the question is, what are the profits attributable to permanent establishment? And 2-3 things emerge. As we see many of the case laws in India, there seems to be this whole approach to continue on formulatory apportionment. So you go back and say that if you are marketing activities in India, X percentage of your profits are liable to tax in India. And is that an appropriate approach? That may be a very simplistic approach. That may be an approach which avoids a lot of litigation. Maybe that gives you answers which are very, very important. But are we really doing FAR analysis in an appropriate sense to come back and say that assuming that there was marketing in India and assuming, for example, that there was no research or anything else manufacturing in India, what part of weightage would you give to the activities in India compared to the activities which are happening overseas, and how do we appropriately attribute the profits which have to be taxed in India? And I think there's a lot of way to go out there. We are aware, of course, that the 2 decisions, and I'm not going to spend a lot of time analyzing those decisions. A lot has been spoken about those judgments. A lot has been written about those judgments. But the 2 judgments, Travelport, which is a very interesting judgment. Here is Supreme Court coming and saying that attribution of profits to a permanent establishment is a matter of fact and it's not a question of law, and therefore litigation needs to stop at the Income Tax Appellate Tribunal. And the question which arises is that are we building up a fact pattern that when we are talking about attribution of profits on a permanent establishment, Are we really going ahead and saying that, yes, this is why it is factual in nature? Those facts have been asserted when the assessment is going on, when appeal proceedings are going on, so that when matters go beyond the income tax appellate tribunal, one can argue that there is no question of law arising. And in the context of Travelport, again, very interesting, there has been this debate which has been going on in India now for several decades about the two-entity approach. So if there is a permanent establishment, is the payment of arm's length remuneration extinguishing the liability or not? We, of course, have dozens of judgments, whether it is Morgan Stanley, Hero, etc., etc. But there was this whole question as to whether after the amendment to the OECD commentary, those judgments hold water or they need a relook. And I'm really glad that the Supreme Court again has reasserted that those judgments do not need a relook, that once profits have been appropriately paid to the, on an arm's length basis to the entity in India or the service provider in India who constitutes permanent establishment, there is no need for a two-entity approach, and that extinguishes the tax liability and nothing further is required to be done. And of course, we then have the SAP Labs judgment of the Supreme Court. Interesting judgment to go back and say that, and you know, again, in the previous panel, I was hearing Sanjay and everybody on the panel talk about how today you are looking and getting comparables. And I must say that in India, probably to my mind, transfer pricing in some sense, if I may use a word, degenerated into only comparables and nothing else. But bulk of the times it is looking at comparables, nothing more than that, which are the right comparables, which are not the right comparables. And here we are looking at to say that tribunal was supposed to be the last arbiter because that's a factual thing. And the Supreme Court coming back and say that no, determination of arm's length price is something which is a question of law. What the High Court, of course, has a right, and that is given, we didn't need Supreme Court to say that if the finding of the facts are perverse, the perverse finding of fact constitutes a question of law. That's a given thing. But the way the judgment has come about, are we looking at opening up a Pandora's box out here to say that going forward, every time you're looking at a transfer pricing matter, you're not going to be sort of closing those disputes at tribunal. It's going to go to High Court and things are not going to stop. And that again is not something which is very, very welcome. You know, again, leaning back on the earlier panel, a few points were made which are very, very interesting. One of the panel members came back to say that when board is looking at taxes, they are not looking at surprises. Sanjay put it to say that, can we sleep well? Is there a degree of predictability? And my concern is that while as a country, we are moving forward and doing lots of right things, we are the good spot, the bright spot in the global economy. But when it comes to our tax implementation, are we really settling matters? Can we, even as advisors, give sort of a hand on heart and say, this matter can't be litigated because we are not taking any aggressive stand because matters just keep on coming up. And if you can't give certainty or a reasonable degree of certainty, then probably you are sort of creating a barrier to foreign investment. But that's a side note. But again, something which MNCs need to be very much worried about. Digital economy, of course, will continue to be an important thing. The first part is that on Pillar 2, we are still seeing work in progress. There has been nothing final which has come out after the October 20, when India was sort of castigated. And I know many of us going to Mr. Akhilesh Ranjan and coming back and saying, why did India have to introduce a digital tax? And India went on to talk about significant economic presence. We then saw how so many European countries did something likewise. But nothing significant seems to have happened where OECD can come back and provide guidance. And again, as I mentioned earlier, while a lot has happened on Pillars 2, where one is talking about the fact that the Europe has, so to say, virtually embraced. But is that so? So, for example, Singapore, which is of course not Europe, has come back to say, yes, we are going to implement Pillar 2, but we are going to do it from 25 and not from 24. Or Hong Kong has gone back to say that we are going to consult with the people, and only after that consultation is done will we come back to say how do we want to deal with Pillar 2. Or you look at Australia, which has come with a similar proposition to come back and say, we want consultation. We want all our stakeholders to come back and say, how do they view Pillar 2? And after we get the inputs, we are going to sort of implement whatever we need to do on Pillar 2. So, as I said, some step forward, countries adopting, the countries which are adopting, Germany is coming back to say, yes, we'll implement GLOBE from 24, but UTPR we are going to go from 25. So we are seeing sort of a mix and match approach. UAE, which I mentioned earlier, for example, has come back to say that we are going to put a 9% tax, but there is an enabling provision out there which allows a higher rate of tax for global companies, for global MNCs who are covered by the GLOBE rules, and presumably the presumption is that that's going to be 15%, but we still have a way forward to emerge there. And then, of course, we have USA, which is still a bystander. Several of the Latin American countries haven't done significant progress. India, of course, is willing to embrace, but we don't have anything domestically today to say how and in what form will it embrace. And the question therefore arises is that what's the way forward? How do you start planning for taxes? And as I deal with several global multinationals, and we are working on a map proposition, and the question was that as we come to attribution of profits to permanent establishment in a map situation, would the proposed Pillar 2 provisions afford any guidance? And I don't think there is any answer available there. It ought to. So if, for example, you're going to say that when the law changes or when the global framework changes, you're going to go on Pillar 2, and there is a methodology, albeit a very complex methodology, which is going to tell you how to attribute profits to permanent establishment, or even if there is no permanent establishment, if there is just operations in a country, how are you going to attribute profits? Could that be a reasonable way of ascertaining profits when the rules are not applicable? Again, an open question. But again, these are the issues which are continuing to be grappling each of the MNCs, and we'll continue to see how things move there. We spoke about exchange of information, and without taking too much time there, if I may just say that you should presume that the world is sort of without any barriers. In fact, thanks to the fact that India's stature has arisen in the global market today, we have seen countries where if India is asking for information, it is just readily provided. So be it Switzerland, and there are points of time when that information which is given probably is something which you could contest, ought not to be given in the strict letter of the law. But the authorities are going ahead and sort of implementing substance. If they believe that, so for example, there was this whole question that if there is stolen information, and on the basis of that stolen information, information is asked for by India, is it legitimate or not? And very interestingly, Swiss authorities have come back to say, if India is asking for information, how they got their information, how they got the base of that information, we are not going to challenge. We'll presume that they got it legitimately. Whether it was stolen by somebody else and given to India or landed in India's lap is something which we are not going to consider. But increasingly, authorities are sharing information, and any attempt, rightly so, to frustrate the ability of authorities to not act on what is otherwise legitimately information on the basis of which taxes can be collected is only going to be turned down. So where do I see things going forward? And this is just sort of a crystal ball gazing. It's more of the same to go back and say that disclosure of tax policy is going to be increasingly going to be part of a good tax governance. And I must compliment you, as I was going through the entire report, which has been prepared by Tata Steel, so many aspects where you are going and openly saying, this is the way we are approaching tax. This is the amount of senior time that goes into looking at tax. How do we ensure that compliance is happening in an appropriate manner? And there is so much that you might just wordsmith there, but effectively you can always make out entities which are following good corporate practices, tax practices, and are being very transparent about it, and others who are not. And that will continue to be the case. We need to get focus on map and timelines. I hope India improves its track record. There is an effort, as I can see, quite a bit there to make that happen, but I think that's something to go out there. I mentioned about Pillar 1, Pillar 2, how things are progressing, and how MNCs need to be very much ready in terms of the principal purpose test and GAR. Thank you all so much. I hope that was useful. Sure.
My attempt will be to be a little provocative over the next couple of days to make it more interesting. Dinesh bhai, a decade ago, the Vodafone judgment of the Supreme Court came. The retrospective amendment came later, and then another amendment that has come to undo the retrospective amendment. A decade later, how do you look back at that in a nutshell? And do you think we are completely over that and a new era of taxation has begun in India? Do you think we are over that?
Maybe I can answer that question slightly differently, Arun. You know, when I began my first reading of tax for my final CA, the first sentence in the tax material of Chartered Accountancy course was that there is no equity in taxation. Either the law allows you to tax something or does not allow you to tax something. I think we have gone long past that. I see judicial precedents today which try to look at what was intended. But we go on saying that it's a dangerous path, because how can judiciary substitute what was intended by the legislature? But I see nothing wrong with it. Attempts to just interpret any provision on the basis of technical wordings are just failing, and that will continue to happen. So rather than answer to you on how would Vodafone be interpreted, I really don't know. I do believe that the law as it stood at that time did not permit taxation of such a transaction. But that said, courts would interpret things very, very differently. There's an evolution, and that evolution is not unwelcome.
Are we over that? Is the Vodafone hangover, Shell hangover, are we completely over that?
I would think so. People have almost forgotten Vodafone because the dispute was resolution, cane refunds happened, so things have moved on. A couple of other large entities, refunds have been granted. And I think the overhang that the world had, that will India introduce a retrospective amendment, at least I don't see the foreign investors talking about it any longer.
I'll just build on that and quick answer. 7-8 years back, the biggest issue was the trust deficit between MNCs and the tax department. You think that the trust deficit has been bridged?
Again, not a very easy answer which I can say yes or no, Arun. The way I see it is that all the steps which have been taken, be it faceless assessment, and not much is being spoken about it, but I think there are some wonderful experiences on faceless assessment. So we had situations where global MNCs used to face 20, 30 items of disallowance, and now on faceless assessment, you actually get just 2 or 3 items and sort of you are moving on with life. So the attempts to bridge the gap are very much there. I do think there is some element in bureaucracy which is still hesitating to give exemptions, deductions, but overall it's being bridged, yes.
Any comment? Can I take Akhilesh sir's advantage of his presence? A quick comment, sir. You were the competent authority, you're now this side, but the evolution, especially of the tax department vis-a-vis MNC taxes.
Well, I think I agree with Dinesh that a lot of work is being done by the tax department. I think the repealing of the retrospective amendment was just an example of that. It's not just isolated. There are efforts everywhere to try and bring in more certainty, there is a lot of gap remaining in building trust. To answer that question, I think a lot needs to be done. There are the time taken in litigation, the issues that have been taken up in litigation, the lack of certainty out there. These are things that have to be addressed. But I think the effort is there. The effort is very much there. And I'm glad to hear Dinesh saying that now nobody asks that question of whether India will do a retrospective amendment. That is how it should be. That's what the government wanted to convey to the investors. And I think, yes, it is the age, again, I agree with Dinesh, that it is the age of evolving jurisprudence, where you are not restricted to the letter of the law, but actually trying to find out the social purpose of the tax law and then implementing that. That's something very important.
Uday bhai, a quick comment, and then we will close the session.
Yeah. Dinesh and sir, whereas I agree on the corporate tax and income tax, I think a lot has been done. If you look at the other law, which is GST, I think today there is a lot of gap on that, a lot of transparency on that. But the way implementation is being done today, I think there is a question mark in terms of the approach of the revenue in some respect, the revenue-minded approach. And they are doing the job. I'm not saying we are doing our job from other side. But the GST, I think there is a gap in my view.
Dinesh, any final comments as?
No, I think we are moving in the right direction. I would agree with Akhilesh Ranjan that a lot more needs to happen. And I think needs to be a recognition that while we are, as I said, a bright spot in the global economy, there's a lot we can do on tax front. But I think what heartens me is the way things are going, and particularly the tax transparency report and those evolutions. Thank you all for a very patient hearing.
Big hand. Thanks, Dinesh bhai, and I must say that I had ChatGPT the top 3 issues in international tax to match with what Dinesh bhai is going to deliver. So 2 of the issues matched with what Dinesh bhai said: digital taxation and BEPS. Of course, if you ask it for its analysis, it can be no match for Dinesh bhai and our speakers. Be that as it may, it's been a riveting first 2 hours of sessions here at the conclave. Can we have a quick 15-minute break and be back for the next session? Tax investigations, the new norm. Our next speaker, Badri, is already here. Look forward to having you back in 15 minutes. Let's take a quick break. Thank you.